Bitcoin dollar on Bitfinex. This is the crypto sniper, Francis Hunt, and we are looking technically, and this is the view I'm giving you. Reason to be is that you have a key level of significance that was here, the top of our last performing ascending HVF, and it was at the key 3000 level. I may have some interesting charts for you on that. That would be over here and here, he says, while he scrambles around. So what did we have? This is a couple of interesting observations I want to give you around the key round numbers. Excuse this chart. It doesn't do full pane. It's a bit frustrating like that. I can't get it to move away. So here's how we did the 1000s. And let's just get right down there. You run the 1000, you dip through it. So key levels of significance, just run. It's law of HVF, you'll find out about it. You dip back down. You then smash through it and then revisit to support on it. Also just running it in, finding the support. Then you move to the next key level of significance. So it's like a 1, 2, 3, 4, 5. This is not to be confused with Elliott wave theory, which often talks about 5 wave legs. This is just specific observation. 1, 2, 3, 4, 5. So break, pull back, break well through, come back to support, move to next key level of significance. 1, 2, 3, 4, 5. Test the break of the key level, pull back below it, then advance strongly beyond it, pull back to support on it, then advance. So this is what happened on the key level of significance 2. This is on $2,000. Exactly the same. So here comes the move, break, pull back below it, advance strongly through it, come back and visit it on support, move to the next key level of significance. Now this is the 3000 level. You'll note this is a logarithmic scale, so the distance looks asymmetrical. It is accurate. It is a logarithmic scale, so that I could squeeze this history in for you. What do you get? You go, you go, you go. This is where we are looking now. There was a very big barrier across the 3000. We looked at it for a while. You got a slightly different reaction. We wound, we broke, and we went, in my view, straight to the 3, stage 3. So 1, 2, and 3 was circumvented, and this is typical of a market that is accelerating and possibly going into a blow-off state. So you actually went 1, 2, and 3 all in one. You didn't get a full pullback below the level at all. You went straight to the next key level of significance, which was the 5000 level. So what should come next? Well, in my view, that's your 1, 2, and 3. So it's accelerated through those stages, although, as I say, technically in 2, you didn't get a revisit touch. You just broke right the way through. So what has to happen now is this is either a bigger version. In other words, this is just the 1, and we're waiting for a 2 pull back below the level before a move back up above it, and then a back on to support it and break up. Or this is, as I've indicated, it may be all just 1, 2, and 3 in one go. So that is my take of where we are at now. So what do we expect to have happen? I expected at this juncture, when I took this, the head and shoulders target to be made. Why? This was a key level of significance. There was resistance here, here, here. And now it'll turn support. So when you come down, the head and shoulders had a target. We used the 4000 neckline. So let's go to the main chart again, where you can see a bit better. We used the 4000 neckline. You'll learn why on the HVF method if you do a program. But down, 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 and that gave us a target just above the 3000 levels, which confluences with this ascending HVF, which many would consider an ascending triangle. In traditional technical analysis, that was broken here with momentum over there on that day. So that was resistance, 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 broken. So this now turns to support. So you run, you just dip into that level, and then you rally. Also note the volume spikes. Let's show you this technically as well, charts that I've prepared. So if we have a look at this, you'll see a number of interesting things. So on the volume side, extreme sell of volume. So we're going right back to the beginning of the year. extreme seller volume was not the low, but the low came later, although it did come quite a bit later in terms of price. So to see where you were in price over there, let's move this across a little bit. You can see that when that first selling candle, that's that middle red one, ended, it was still above 850. By the time you came to this candle, the low actually traded below 770. So there's scope for lower lows there. Then we've got another high volume candle, and we've got another sell-off period, and it wasn't the low. The low comes still on high volume, but significantly less than the extreme sell volume. These are the three highest extreme sell volumes. In fact, they're almost the top three volumes altogether. There was a green volume that might have been slightly higher than this one, but these are, out of the top five, they are 1, 2, and 4 of all-time volume days. It shows that in selling, we have far more panic selling than we have panic buying. It's always more extreme. So what happened yesterday in that big day? I want to bring your attention to something that many will miss because they don't understand the importance of volume. You'll learn all about it by being part of our community, and you won't be allowed to forget it. We had an extreme volume selling day. That's still showing it at 3.343. I prepared these charts last night. We're now down at 3.1, by the way, so that red candle is extended even further. And the volume for the day may have got a little higher. But what do we expect? The volume will drop and calm down overall for the day, but it is unlikely that the 3.3 that we had in terms of price was the low. So the anticipation is still that we will make the head and shoulders target. These are not as high performing as HVF targets in my general view. However, they do, and they can also be cyclically highs where you can continue a lot lower as well. So there's just a bit more variance in the potential outcomes that can occur. But with this strong level of resistance, I'm expecting some degree of support as you run here. So those that are bottom callers, dangerous game, dangerous game. Leave the first 10% on the table is my view. Be early to continuation breakouts. Be slow to reversals. That's my view. That's the law of HVF and Francis Hunt. You will find out more about that, as I say, if you train. But the key point was there was clearly a very strong resistance. What was it all about? It was as we came to the 3,000 level. As we came to the 3,000 level technically. So let's talk about that again and just remind you of that chart. As you came to the 3,000 level, you can see this is where it was all at. So my overall probability-based assessment is that a toe through the 3,000 level and you'll start to get buying support, and you may get the first sign of a medium time frame rally. This may or may not be the bottom. If you are generally incredibly bullish and quick to the punch, you could find that just 2 990s, 9s, and that kind of order, a limit buy, limit order in and around this major resistance turn support level, just on it being broken, would see strong buying. It could turn out to be the bottom and you do exactly that. It could also just turn out a bump up to somewhere here, and then you smash down low and we are into a much more cyclical sell-off. Remember, we came into January and we traded in the 700 to 1200 range. You're talking about something that is now at 3,000, which is representing about 2.5 times its highest point in January, and well over 4 times its lowest point in January. So it's not a bad year, by all circumstances. You don't have to get more in this year. That said, there's a lot of fiat that needs to make its way out. So that's a chart for you to consider. Another chart for you to consider that I did was the number of warnings that occurred in calling this top. We are, believe it, being early in taking money and being defensive, and we watched these warnings and we're getting ever more nervous, and we still ended up waiting for quite a few of them to trigger before we went in tether, but we still didn't get too badly hammered because we were getting warnings a lot earlier. The ascending HVF was a potential threat, particularly if it didn't perform. It didn't perform. It only went to interim 2 and then failed. It's a fail when it ran the funnel. That's your first warning that the breakouts, A, too much buying was coming in through the pattern, and B, the breakout was running out of fizz, and you undid the bullishness of that funnel level by the fact that it was run. You then had quite a strong rebound initially that might have been continuation, but then you sold really hard through the yellow funnel area, which was the legacy funnel of the failed upside HVF, which turned out to be a left shoulder, and the fizzle out head turned out to be the head on the second interim, and that was it. You couldn't make target. So what we then got after that is we couldn't run that funnel again. After smashing down through it, resistance, resistance, resistance. It also gave us our 2 and 3 and our high 1, low 1, 2 and 3 with a nice big amplitude because of this late bulls charge rally. That gave the HVF target here down to there. So then we broke, we rallied at this interim for a short while, and then we smashed down. It did that exactly. Go and have a look at the chart on the live side. Let's bring it up to date. Let's drop the time frames and bring it up to date. So you know now why I speak of the 3000 level just being run as potentially a key point. It may also just make the 3020 and support just above the 3000 level, so it doesn't have to run it, but often cases it does. So don't get too excited about this for bullishness yet. There would probably be another spill down. I'd be very surprised we get this close and we don't run at least the 3019 as we are seeing there. And as I say, I still suspect we'll get into the upper 29s. So what was I talking about? I was talking about this. Look at this. The selling, those rallied, kept getting selling off, kept getting selling off, kept getting selling off. Those are like shooting stars, only they're not at relative highs. So they're kind of inverted hammers that are pointing to weakness, weakness, and then you get your spill. That is your 4,000 neckline. Why did we choose 4,000? Key levels of significance. That was the one that you didn't see on the 1, 2, 3, and 5 key levels of significance drawing I just did. Here it was. You could see it. Now, this is the thing about head and shoulders. That was a head and shoulders with a 4,000. Now, I don't believe that made target. If it did, it was incredibly close. So let's just assess that right here and now. And so 4,000 was showing itself to be a key level. Obviously, the law of round numbers often do. Legacy funnel levels often do. You will learn all about that on a program. Anyway, that did not make target as I suspected. So you can't trade reversals with the same consistency as you would HVFs. They don't have the same performance, but they're up. You were sitting and knocking against the 4.5 level. This was all 4.5, 4,550, 4,550. We didn't spend much time above there. We made that second interim, and that's when the die began. Down. So this 4,000 level was significant here because you spilled just through it, you rallied. You came down, you spilled just through it, and rallied. That was your hold. You could have got in short up here with your squeeze. Higher at 4,100 and got an extra $100 banked on the table. There's your stall on the interim, and this is where you're at now. Dropping it right down for the people that are asking about the here and now. Dropping it right down. Little setup continuations always occurring. Don't get too excited about this. You are this close to that target. I think that's a good draw that we did. I would be surprised if we don't have another sell-off and stab down. So that's your macro to micro take on Bitcoin technically, and how if you're part of our community you would have been out a lot sooner than all the folk who are licking their wounds, and the amount of clues we got that this was running out of steam. Plus the volume analysis, etc. This is a small example and synopsis of the kind of work we do, and this is where it is with Bitcoin. So you have and you know where I stand on it. A likely rally to come at the 2.9s, the upper 2.9s, after running both the head and shoulders target and the key level of significance on the 3,000 point. That would then hit it into what was previous resistance turn support at the top of the last ascending HVF that occurred. So there's your recap. This is going to be an interesting zone. Expect a rally. Do not expect that it has to be your bottom for this move, although it may well be. It is a key decision point. So what happens next after that will be definitive. So we are getting to that point. If you've hodled all the way, you're probably at the first point where the reinforcements might arrive. There's no point closing your Bitcoin now until you see what happens. If we fail to hold these levels and we have a weak rally, a rising wedge, or any other scenario that occurs round about here that indicates a rally which is long and grinding but not going very far and gives either a rising wedge or a bear flag channel, expect the next leg down. What you'd most like to see is rounded bottoms, marginally lower lows at these nice rounded bottom, like a semicircle over here with a little dip, some call cup and saucer, and then maybe first HVFs in a new trend on smaller time frames pointing up. That would be recovery orientated. You would have to be in our community to know about that in greater detail, but at least you've got an idea on your free view what to keep an eye out for. I hope that's useful. This is a long clip. This is Francis, Bitcoin, and speak to you all a little later, and enjoy the trade small, trade safe. Nothing here I say should be taken as a recommendation.